Well, howdy there, ladies and gentlemen. So the other day in a live stream, I mentioned that I am more in cash currently than I have ever been at any point in my investment career. And it is absolutely the God's honest truth. Currently, I have 40% of my net wealth is in cash right now, versus about 60% is in stocks and options related to stocks. That is by far the highest ratio of cash to investments I've ever had. Usually, for most of my investment career, it's been around 95% or more of my money is always invested in stocks or options at a particular time. More than 95%. That has changed recently, guys, and I'm going to go through 3 reasons on why that has changed and why I'm holding so much money in cash right now, which is very rare for me, very rare for me. So, and I think it's just kind of important to get out there, because why is a guy like me holding so much cash? Well, I mean, it's technically not cash. It's just money that's in accounts or whatever waiting to be invested. Why is that happening versus why is that not money not already in stocks or something like that, guys? So I'm going to give you these 3 reasons. Let's get into this. The first reason is all around PE ratios currently. So currently, the current PE ratio right now, and you want to discount the one where it spikes way up there in 2009. That was basically because we had the recession and companies had huge charge-offs and all those type of things. So that's why the PE ratios went up insane there. But if you look, anytime since, about 2010 and on, we're currently at by far the highest PE ratio. So we're since I started investing in 2009. I started looking in the markets in 2008. Since I started investing, the current PE ratio is by far the highest ever in my investing career, guys. So first off, right off the bat there, I'm not running out to buy stocks if they're higher priced than they've ever been on a current PE ratio. PE ratio basically tells you what the company has for earnings coming in versus what the stock price is. And the lower that PE ratio is, generally the more undervalued a company is, unless of course they're losing more and more money and things like that. But generally speaking, if you look at the market as a whole, if the PE ratio is under a 20, or especially if it's under a 15, that means the market is undervalued. If it's under a 20, it's probably, in around average value. And if it's over 20, it's starting to get a little overvalued. Our current PE is almost at a 25 right now, guys, around a 25. So I would put us, that's why I say we're in slightly overvalued territory. Are we at something like we went through in the 2000 type situation? No, we're not that bad. We're not that bad. Then we look at the next PE ratio. This is called the Shiller PE ratio, right? On the Shiller PE ratio, look at how much higher we are than we have been pretty much ever before. I mean, we're at well over a 30 on the Shiller PE ratio right now. The last time it was anything even remotely close to it, it was in the dot-com bubble in 2000 when the Shiller PE ratio was around a 43, 44, guys. So you look at that and that in itself is a big reason why I'm not running out there to buy stocks. Why am I going to run out to buy stocks when they're more expensive for me to buy them than they've ever been in my investing career? I'm just not, guys. That's why I'm going to sit more on the sideline. We look at this here. The Nasdaq's up about 18% year to date. We're what, 8 months through the year? About 8 months through the year, and the Nasdaq's up 18%. If the Nasdaq keeps on this trend, it will have gone up well over 20% this year. Well over 20% if it keeps on this trend, guys. In a year, that's an insane amount for the Nasdaq to go up, especially in a year where we're not coming off a stock market crash or something. I mean, if you're coming off of a stock market crash and the market goes up 20%, then maybe that's okay. But when you're in just normal, like last year was just a normal year, right? And then this year, the Nasdaq being up possibly going up well over 20%, that's a monstrous move there, guys, monstrous. So that first reason for me holding more cash is just things are a lot more expensive. It's like going to the grocery store and, a few years ago, you could buy ears of corn for $10 and you're buying them like crazy because you love corn and they're 10 for $10. And then next year you go and it's 8 for 10. It's like, okay, yeah, I'll still buy all these corn. And then next year it's a 6 for 10. And it's like, shit, man, these corns are kind of getting expensive now. I guess I'll still buy them. And then all of a sudden it's 4 for 10. You're like, dude, a few years ago I was paying 10 cents an ear for these corns and now I got to pay 25 cents. Like, what is going on? That's kind of how I feel about the stock market right now. These PEs are just getting so high that I'm like, it's making way less deals out there, way less things for me to go out and put my money into. The second reason behind me having more cash than ever before is my number 1 and my number 2 investments. I have no interest really in putting more money into those investments, which is kind of rare for me, but in GoPro's instance, right, that's my biggest investment. I've had no interest for over a month now of putting any new money into GoPro, just because I've been already so heavily invested in GoPro. I got so many call options that expire in 2018 and 2019 already in GoPro. I'm so heavily invested in that one that I just literally don't want to stick any more money. If it went down to, I don't know, $6 a share or whatever, I still wouldn't put money in, just because I'm so heavily invested in it already. I've already averaged down so many times. Wynn Resorts, I'm kind of at that same place with it. Although Wynn Resorts, obviously, the stock's done tremendous and all those type of things, I don't feel like putting more money in Wynn Resorts. I mean, it would have to literally go down to probably less than $100 for me to really start investing in Wynn Resorts, and that's like a 27% downside move or something like that. Like, that would have to be dramatic move down for Wynn for me to really start putting more money in Wynn. So those two stocks, although they're my two biggest, and I still obviously believe in them. If I didn't believe in them, I would have sold out already or would be selling out. I obviously believe in them a ton to keep them as my number one and number two. I just don't feel like putting any new money into it. And then you compound that with what we just talked about with the PE ratios on a lot of other companies, and it's like there's so few companies for that I'm even interested in investing in, because the PE ratios are so high. And then that gets me to my third and last reason here, guys, and that is just me more, I guess you could say, maturing a bit in my investing career, where I want to keep some more money in cash. Now, 40%, I don't want to always keep 40%. This is a lot. Like, I really don't want to do that. I want to keep closer to around 10 to 20% in cash at all times. For instance, if a stock drops huge and that I love, I can make a big position in that stock immediately or almost immediately, right? And I can take advantage of opportunities. You know, a flash crash happens. I could, load up on a stock and then in a flash crash or something like that. I'm always, have more money on the sideline, and say a recession came out of nowhere, right? Let's say a recession came out of nowhere. If it came out of nowhere, I'm sitting I've got at least some money on the sideline, then as things drop, my dollar's worth more and I get more shares to buy in whenever I want to buy in, and those kinds of things. That I have money if I don't need to buy put options, if I need to buy, if I need to go short shares, I have money on the sideline rather than just the money invested in those long shares, which primarily I generally am. I'm just going long companies and those kinds of things. Sometimes I'm buying call options, but generally speaking, it's mostly just buying shares because I believe they'll go up in value over time. So those are the three reasons, guys. You look at the P ratios, they're higher than they've ever been in my investing career by far. The highest, on the Shiller PE is higher. It's the highest it's been since literally the dot-com bubble burst in 2000. You look at, I don't want to really stick more money in my number one, number two biggest investments. And then you compound that with, I want to keep more money in cash, just generally speaking. And that's how we get to a place right now where I have 40% of my money in cash, guys. I don't know what else to say. I have started buying Michael Kors stock, as you guys know. That was on the August video. That's a new stock I'm buying. Other than that, it's hard for me to find deals out there in the market. Some of the low PE companies like the Fords and the GMs of the world, no interest at all in investing in those. I don't care if they're at a 5 PE or an 8 PE ratio. I don't want to be in a car manufacturer. And when we're going into the electric game with Tesla, when we've already had, in my opinion, peak autos and things like that. So some of these companies that are low in PEs, I don't want those companies at all. I'm not interested in them at all. And some of the companies I love that I believe in for the future, they trade at ridiculous P's. And it's like, what's a guy to do? Go and buy super overvalued stocks and risk, them going down substantially, or being forced to buy stocks that you don't even believe in just because they happen to be a low PE. I don't want to do either one of those things. I always want to buy stocks that I believe in and that are either undervalued or at least maybe fairly valued. But I sure as shit don't want to buy overvalued companies, guys, at the end of the day. So that's why I'm heavier in cash than ever before. Let me know in that comment section what you guys are, as far as, maybe you're worth $10,000. Do you have $5,000 in stocks right now and $5,000 sitting on the sideline? Or, you don't have to tell me specific numbers, but I would just love to hear from you guys as far as like what your ratio is of your net wealth in cash versus what it is in investments and things like that, guys. I would love to hear from you in that comment section. Love to hear your opinion on this video in general. Let me know. Hit a thumbs up if you enjoyed. If you just came across this channel, you may want to subscribe. We talk personal finance in the channel. We talk entrepreneurship. I'm an actual business owner. I give away so many business tips. We talk stock market investing more than anything. Check out my books. They're linked in that description. My stock market strategy, my 10 ways to make passive income. Thank you for watching, guys, and have a great day.